All right. Are we on? Is this mic working? Looks like it is. All right, guys. How's it going? Que paso? This is Hala Pablo. How's everyone doing? Thank you for tuning in. I'm not a financial advisor and I don't have a crystal ball. So please do your own research and take everything I say with a grain of salt. Okay. That's it. Let's get into this now. Bitcoin update, Ethereum update, and a couple swings that I shared with my trading group that were very juicy. That turned out very well so far. I think we're like 4 for 4 on calling these swings. I'll show you the charts in a moment. You see for yourself that there is a method to my madness, and you can make a hell of a lot of money if you're just patient and you exercise proper technical analysis. Okay, so first things first, let's see. So I have this on Ethereum right now. So Ethereum, people are asking, is Ethereum going to keep going up? Is Ethereum going to keep going up? Well, Ethereum is overbought right now. I believe it's severely overbought. I've drawn out this wolf wave on the macro. This is on the macro daily here up on top. This, of course, this green long rectangle from the one wave through the four wave is the wolf wave, drawn through this rising channel, which is actually a macro bearish structure. And at the overbought area here, yeah, what we're seeing right now is just liquidity being generated by the market makers. They fully intend, I believe, to dump the price. It's just inevitable. But they're trying to get some exit liquidity as much as they can before that event. So that's why I'm not buying Ethereum. In fact, I'm out of Ethereum. I sold Ethereum back around 2,900. And so I dropped my positions, and I'm gonna rebuy back at when the price crosses through or intersects this wolf wave. That's where I'm going to start scaling back into my positions, however long that takes. It can go up more from here, but it's important not to be enticed, not to have the fear of missing out and jump in at that point. That's where usually, if those of you who know, that's usually where you get killed. Because of the FOMO dynamic is very real. So on the micro, I have this down on the 15-minute here. This is the same. This is the same asset. This is Ethereum, but this here, this rising wedge, which is also a bearish structure, is this area here where it's circled. So this is just under the microscope on the micro on the 15-minute as opposed to the daily. So each one of these candles is a daily, and each one of these candles is 15 minutes, and that's why they look different. But as you can see, they're both displaying bearish sentiment overall. So yeah, we see this rising wedge with the spread narrowing. Usually what happens is once it gets to the confluence of this wedge structure, we have a little spring, and that's to entice the last remnants of retail to get in, thinking it's going to moon, and then it dumps from there. Or sometimes it just doesn't even spring, it just retraces or distributes. So anyway, that's Ethereum right now. I'm keeping an eye on it, but I am not in it, nor am I suffering under any delusion that it's going to moon before the distributing. So, all right. So now let's go to Bitcoin. Bitcoin on the macro and Bitcoin on the micro. So same thing with Bitcoin. We have the macro rising wedge. This is on the daily as well. Overbought, approaching the confluence of the wedge. This here is a macro counter trend top. I believe it could go up higher. It could still make another run for it, although we pretty much exhausted, I think, any kind of legitimate uprising or uptrend that is not a bull trap. I think anything from here on up is very trappy, and I would not get into it. I've exited my Bitcoin positions as well, apart from the ones that I hodl Long term, all of my cash swing positions in Bitcoin have been liquidated. In fact, I liquidated up here in this area where this yellow line is. I've already sold out around 53,000. So I'm anticipating a drop from here, maybe another bounce within the macro wedge structure, and then a break to the downside. And then on the micro, we look at confirmation in this. And here, let me get rid of this. Now on the micro, we have a clear trading range drawn out with trading range support. The middle, which would be the 0.5 Fibonacci, and then the trading range resistance. We've seen two areas here where we've gone above resistance. We've had like demand tests, and then we look and we see that immediately we were stopped out, and that would have been right at the 1.68 Fibonacci extension is where they got stopped out. So there is a bear order block, very large one above the 1.68 Fib extension, which puts it at 53,000, which is right where I sold at. I made sure to sell here. And then since then we've come back down. We've bounced before trading range support and the 0.5 Fibonacci or TRM, trading range midpoint, which is what I like to call it. And since then, we haven't been able to prevail the 0.5 fib line. So we've had two bounces off it, two rejections, and now where we currently sit back at TRS or trading range support, and then we have rather large predominating supply volume coming in. So this is all indicative of an impending distribution. Although we might get one last UTAD, which would bring the price back up into the fib extension area to attract buyers before they pull the floor out and the price falls. Because of course if that happens, we're going to be way overbought, way up here somewhere where some of this stuff will be going on, some of this monkey business, bull traps. So just know it'll be up here around the tip of this macro wedge. So eventually these macro wedges dump, guys. And when it dumps hard and fast. So I just want you to be aware that if you're going to play around up here and with going long with Bitcoin, say like this goes up here and you're enticed to buy in once it retests the TRM, just be very, very careful, because this is usually where the trapdoors are, up in these fib extension areas. And it could even go beyond the 1.68 Fibonacci, and we could go into the 2. And if we hit the 2, that would put us at 53.2. 53.2. Anything above 53.2 or 53,000, you're on thin ice up there. So just be careful if you're enticed to swing this thing and go long. I'm not swinging it. I'm not going long. I'm not suggesting to anyone in my group or otherwise that they buy Bitcoin right now. That's just, it's not financial advice. It's just what I'm doing. And so you do what you want at your own risk, but I'm not doing it. So, all right. And real quick, we did some swings in my group, in my Discord trading group. I've got 4 main swings. We're 4 for 4 right now, fixing on being 5 for 5. In my trading group, my private Discord trading group, I have a channel called Hot Trades, and it's read only. And so here I post the charts where I'm investing my own money, my own swings that I've handpicked. And so starting with Pangolin the other day, I pretty much predicted the whole Pangolin swing while it was still a flat line. Here it is right here. Back on the 22nd, I said, if anyone's interested, here's Pangolin. Now, I did another video on this. I've got a position in it, expecting a markup, limit sell. I gave them my limit sell. Of course, it went way beyond the limit sell, but that's okay. I just took it up to the 1.618 Fibonacci extension, and I made, 11, 15% or whatever. Of course, this thing went up almost 200%. That's okay. I could have jumped back in, but I have a rule that I don't transgress. Is once you're out, you're out. I don't jump. I normally don't jump back into swings once I get out until after the next reaccumulation. That is, if it's going to put up another leg, I wait for the next reaccumulation, and then I'll jump in again. But in the middle of a markup, a pump, if you're out, you're out. That's just one of my cardinal rules that I abide by, and it prevents me from getting wrecked. So pangolin, yeah, and you all know how this thing shot up. It was fierce, and there's some people in my group, I believe, made some very good returns. There may be some that are still in it that are more intrepid than I am, and they never got out. So they're sitting happy, and of course now it's at almost 4 cents now or something like that. Or I think let me check where pangolin is. Okay, if I go to, let's see, it's in my fractal range. So yeah, it's at 40 cents almost. So this is where it's gone back up. So I got back in here. Let me put this on the macro as well. So we'll get Bitcoin off of this. So right here at this redistribution, or this symmetrical triangle here, I got back in and it took it back up to the 1.618. I have my chart that I shared with my group after the first pangolin swim. And then I did another couple charts on, let's see, pangolin, that was on the 22nd. And then we did BitDAO. I'll come to BitDAO. BitDAO is still burning hard, man. 1 inch, we did 1 inch. That was a win. Here's the pangolin reaccumulation where I re-entered. Remember, it was here, and it went up to the 1.618. So that was that went. Where's my pangolin? Right here it is, right here. Boom. So that was another win. And now BitDAO. I posted BitDAO here. It hit the target. Let's see, where's the other? Okay, so this was BitDAO. 1 inch. All right, here's BitDAO. All right. So this is what I looked for here. I saw this lateral consolidation with these random demand tests. And I saw that on the macro, or rather that on the micro, we had this just gigantic symmetrical triangle pattern, and I knew that at some point when the price action hit this confluence, or this apex of this structure, that we're probably going to shoot back up and at least hit the 1.618 fib. So I took a position here, BitDAO, keep eyes on it. I'm taking position limit sell right under the 1.618, which would have been 0.915, should yield about 14%. And sure enough, it hit. Here's the BitDAO. This happened yesterday around 7:30 Central Standard Time. It hit the 1.618, and I got cashed out. But like pangolin, this thing just kept going. So I got out. So anyway, I didn't jump back in because, like I just talked about with pangolin, I don't jump back into. Once I'm out until it reaccumulates. And if I think it's going to put up another leg, then I'll jump back in. But I don't get back in mid-pump. Guys, crypto, you got to learn this with trades, especially if you know how to find and pick these winners. There's always another trade around the corner. There's always another trade. And so what gets people wrecked, what gets new traders wrecked more than anything is the FOMO greed aspect of jumping back in or overstaying your welcome in something and not getting out before it dumps, and then and thinking that it's going to correct and go back up and put up another leg when it's already going down. It's a what do they call it? A sunk cost fallacy. So and a lot of people add to their positions in a declining or a retracing crypto. You gotta understand that with these things more than anything are it's a numbers game with crypto. That's why I'm okay getting out at 15%, even though it can shoot up 80% or 90%. I'm all right getting out at 15, getting my solid 15%. Because of it's a numbers game, and there's so many of them that just pop off all around. And if you focus on one, you could really lose your shirt if you put all your eggs in one basket. So I'm fine getting 15% on pangolin, getting 14% on BitDAO, getting getting another like 1 inch. This was one that I found in tandem as I was swinging BitDAO. Look at 1 inch. Where's the chart for 1 inch? Let me find it here. 1 inch. This is what I was looking at. This is what clued me into 1 inch. And yeah. So I saw that we were having a big demand test at macro trend. Well, this would have been the micro trend resistance. And I thought that it would flip it. It looked like it was going to flip it. Let's see, I sit here, 1 inch also hot, especially if it flips macro trend resistance, which looks like it may happen. What clued me in is this double stake here at the macro trend resistance. How you see how the price didn't fall down before below the below trading range support. It held its own here. Now, trading range support and resistance are horizontal lines. They're horizontal lines, whereas trend is diagonal. So it took a double stab at the trend, at the macro trend, but it held its own at the macro support, trading range support. So that to me is usually an indication that it's a pretty good chance it's going to flip it. And if it flips it, then it's going intergalactic usually. It'll go way beyond TRM. Usually it goes through trading range midpoint, which is a 0.5 fib, another horizontal line, and it could take it all the way up to trading range resistance and beyond. So that's why I took position, and I advised people in my group, not financial advice, but I advised them, this is what I'm doing. If you're welcome to piggyback what I'm doing. And I said if it finds support at 48, then it could rally to the 2.272 and close out the upper liquidity void, which is like mitigating this area here. See where this high was. Usually, if it transcends the trend resistance and it breaks out of the structure, whether it's a rising, in this case, a rising channel, what price action likes to do normally is mitigate the prior high. Basically consummate the prior high before the market makers begin to take profit. So I said that's very possible. And what did it do? So 1 inch, and I just want to show you the time on this. This was on the 23rd of February, it's a few days ago, at 8:59 a.m. And what did 1 inch do? Here's that same chart, 1 inch. See, I told you, it mitigated it. See how it went up? The target got hit, right? So 1 inch was, 1 inch was very predictable, I thought. And like I'm saying, guys, this is a numbers game. I can find these swings usually in tandem, especially now when everything's flatlining and these alts are beginning to hop. Now, another one that I'm in right now is Coti. Now, I've already taken position. I took position last night. I'm fully expecting Coti to hit the 1.618 Fibonacci ringer, and I'll get cashed out there. I put limit sells on all of these, and then I sleep well. I get out with my, in this case, it's 30%. Coti will be 30. Now, Coti could go up another 120, 150%. I'm perfectly fine with that, guys. I'm perfectly fine with getting 30% on this one, 20% on 1 inch, 14% on Pangolin, getting back in for a reaccumulation, getting another 12% on a leg up. All of these add up after a while, guys. It's all a numbers game. And so you want to collect, the parts are greater than the whole, as they say. You want to diversify. You don't want to overstay your welcome. You want to get in at good positions and get out at safe, lucrative positions, knowing that there will be many of them and they all add up, rather than putting all of your stock and resources and stress into one thing and just milking it as long as you can go, and finding out that you could lose all of your gains. You could trace something up and hit 3 or 4 different reaccumulations, and then what happens is it instills a false sense of confidence in you, and then you put everything in, and what you're doing is you're on that 4th or 5th reaccumulation, you misread it, and that's actually a distribution, and you went all in, and that thing just drops like a freight train, and and you lose half or three or you know, 3/4 of all of your profits that you've been accumulating because you didn't get out when you should have. And meanwhile, things are popping off all around you, and you just got handed an L. You just lost out all that time and effort. So there's a way to avoid that, and it is by not being greedy, thinking of these crypto swings as a numbers game, and just getting in and out, getting in and out, getting in and out, where it's safe and you got money in the bank. You're taking profit. No one ever went broke taking profit, or getting out, limit selling at a certain fib line. You know, whether it be the 1.272 or the 1.618 or the 2, just get out. If you set your limit sell, stick to it and get the hell out, take the money and run, as they say. All right, guys, I'm going to let you go. If you got anything out of this, I would appreciate a like, subscription. It's for your own benefit, you know, so you don't miss these updates. If you're into crypto swinging and you'd like to learn a better way to technically analyze these things and how they're going to pop, you know, kind of like what I do. Like I said, I'm 5 for 5 now. Check out our trading group. I keep it extremely affordable, guys. I don't need sponsors. I don't need the money. You know, it's $20 a month, and you learn everything that I'm doing. I share all my signals with you. You could potentially, it's the earning potential, the profit for what you can gain from it is pretty much unlimited. And plus, you learn a very, very reliable and accurate way to technically analyze these charts, and that is through Elliott Wave, VSA, Wyckoff, fractal range analysis, all the things I use. It's a conglomerate of different systems that I've put together. Like I said, I've been doing this since 2016, and I've been extremely successful. You could look at all of my charts, all of my history that I keep on TradingView, 80 to 85% win rate, you know. And I get them wrong sometimes, but I'm right a lot more than I'm wrong, and the right wins more than compensate for the losses. So check us out, and if you got anything out of this, like, thumbs up, and I'll let you go. We'll talk to you later. Don't miss any more updates. Have a good one. Strong hands. You got this. All right, guys. Adios. Bye-bye.